From LALATE headquarters in Santa Monica, this is Afternoons LALATE.
It's a big afternoon as that new employment number was released today, and it showed unemployment surged out of control. It was 200,000 just a few weeks ago. Then it went to 230, then 235. What did it do today? 244,000 new jobless claims. And it's no longer a strong labor market. The narrative that I said several weeks ago is dead is now reaffirmed today as well. The payroll numbers last Friday were a myth, and the numbers today are signaling that the U.S. economy is deeply in a recession. We'll go over what you need to do, but you know what you do first. You go right on this video and become a member. You get the $100,000 of forced stimulus checks in every U.S. state. You get these incredible sums of money right now. These sums of money became law in March, and those checks have been gotten by viewers of this channel. You deserve them. You get them right now. $100,000 across the board, and they're huge. You qualify. We'll go over all these incredible checks later in this recording. Stay to the very end. Go right in this video. Join the channel. Become a Purple Hawk, Purple Power, a Casino VIP member, and get these huge checks across the land. But we have a lot of numbers also coming in. Yesterday we had the CPI. Today we had the PPI. And what do they both signal? Inflation. Inflation's out of control, and we'll go over why it has not peaked yet. Then we had banking numbers coming in minutes ago, and those banking numbers were not good as well. We had Morgan Stanley and JP Morgan Chase reporting corporate earnings minutes ago, and they were weak, very weak, missing on those numbers across the board. Is the Federal Reserve going to do a 1 basis point, 100 basis point increase at that July FOMC meeting? Or 75? Christopher Waller had his comments minutes ago. I'll go over his comments. He's a Fed governor, and why that situation is telling across the board. Your benefits are going up a lot, and that is great news. Your benefits are going up a huge amount of money because gasoline is tracking higher, and the CPI is really out of control. We'll go over what you need to know about that number in today's recording. But what you need to do is go right on this video and become a member. Purple Hawk, Purple Power, Casino VIP. Get the huge stimulus checks in every U.S. state. We'll go over all this big money. It all starts right now as America's most loved show at the midday starts on Afternoons. Good afternoon, everybody. I hope you're having a beautiful day. It's not a particularly beautiful day for the U.S. economy. As 2 weeks ago, I said we're in a recession, but at the time, some analysts were happy and giddy and celebrating and doing a pear dance. Why? Because they said the June jobs payroll numbers suggest a great labor market, just a great labor market. And, you know, the labor market's really strong, they said last Friday, even though that the unemployment claims the day before were not good at all. Well, I said over the last 7 days, when would the unemployment numbers surge to a number that would basically say, stop it. Stop it right now. That is not a strong labor market. And I'm going to wipe that smile off your face to think it's a great labor market. Stop dancing. Unless you're dancing to give me some stimulus from the rain gods. Well, the news came in today, and here we go. 244,000 new jobless claims. That was the number. I told you anything over 240,000 would surge and shake the markets, and it did. Understand how bad this labor number is. It was 180 just a few weeks ago, and that's where it should be coming out of the pandemic. And then it surged to 200. I said, okay, we're getting a little dancy here. Nancy for dancing. Then as we started to creep up higher, I said 230 is my next projection. It came in at 230. I projected 230 again, 230,000. Last week I projected 230,000. It came in at 235. Over the last 7 days, I said, it's not a strong labor market. You see the graphic. Wall Street analysts continue to say it's a really strong labor market because the producer price index, because the June jobs payroll number was released last Friday. It shows everyone has a job. They don't all have a job. And then suddenly, And then suddenly, you know what I said? I said, when do we change the narrative? When do we change the narrative and realize it's not a strong labor market? When does this narrative that's a strong labor market die? It dies when the number surges at least over 240. That didn't take long. That didn't take long. I said this over the last 7 days. And what happened? 2 weeks ago, 230. Last week, 235. Today, 244,000 new jobless claims. This is the highest level since November 2021. It's the worst number of the year. There you go. Because I was doing this with my hand the last 3 days, not because I'm drawing a picture, but because I'm showing you how it was good, how it was high, then it came down, and now went back up. This is the worst number of 2022. That started the day. Also continued the day was the producer price index number that was released before sunrise. This is the sister or brother to the CPI released yesterday. The producer price index number, which gauges inflation as well, rose 11.3% year to date from a year ago from June 2021. And this is near the record high ever seen for the producer price index for a generation, last posted in March of 11.6. That is how the news started today. The news continued with Fed Governor Waller asked whether they would do a 100 basis point, which is 1.0 interest rate spike at that FOMC meeting in July. I told you yesterday they would. What did he say? He did not rule it out, but he said they're definitely doing 3/4. I'm going to go over more about his data in just a second. I got to tell you now, 80, what's the number? Is it, I believe it's now 80% of Wall Street analysts agree with me. I have the data for you later in this recording. 80% now believe that's going to be a full 100 basis point increase in just a few days from the Federal Reserve. This is, folks, why you have to get that forced stimulus check in every U.S. state. It's nearly $100,000. You qualify for it. We have a lot of money in this recording. We have $100,000 stimulus checks. Everyone gets one almost across the board. If you qualify, then we have the incredible sums of money for your benefits raise. Would you like $5,000 more per year if you're on SSI and SSDI? That is coming up later in this recording. And then we have the $15,000 to $80,000 of checks that Congress wants to give you as well. That's coming up in just a second. Stay with me. But first, let's go over what happened yesterday on the inflationary front. Still at issue. Inflation was released yesterday, the CPI, and it surged to a whopping 9.1% from the month of May at 8.6%. This is not good. And this is not good. And it's as inflation continues to creep up day after day, week after week. It does have a great impact on your benefits. It will raise your benefits a lot. But what's important to understand is that this is part of the many, many issues at hand. U.S. inflation already underway, a recession underway, and now labor falling apart also today as well. Let's go over a little bit more at issue what's happening. You know, there is an attempt to give guidance, and then there's an attempt to confuse. And my attempt is to give you as much guidance as possible. But out there's a lot of analysts that are really trying to confuse. Yesterday, they were back again. And last Friday, they were on full alert when they tried to tell you it's a strong labor market. Yesterday, they're trying to say inflation has peaked. Today, they're trying to say that this is a good situation because the numbers are actually going to come down after now. I got to tell you, every day that another number comes out, they try to spin it, and the number doesn't say that. What do you know right now? We are in a recession. They're trying to say we're not in a recession. We already got that confirmation from from the Atlanta Fed GDP Now number released 2 weeks ago. 2 negative quarters of GDP growth. Number two, inflation is not coming down. It has not peaked. I said this last spring. And that every month they say, this is probably the last high read. This is probably the last high read, the last high inflation number. How many times have been saying that? Well, this is the month of July. They've now said that 7 months in a row. Ridiculousness? It is ridiculousness. Then they continue to say the Federal Reserve is not going to go higher on those interest rate spikes. The Federal Reserve always goes higher. The Federal Reserve looked at the May read and then went from quarter to half. They went at the June read. They went from half to 3/4. They're looking at the July numbers, well, the numbers released this month, which are the CPI from last month. And 80% of Wall Street says they're going to 100 basis point. This is why you really don't listen to those analysts, or you listen to me. Now, the great news is I have a lot of money for you. You need this money. We'll be going over more about this economic breaking news in just a second, the PPI, the CPI, the inflation recession. But let's turn to these incredible checks. You ready for them? I am. There is $100,000 approximately of forced stimulus checks in every U.S. state. It's not state stimulus, it's federal stimulus. And I got it for you coming up later in this recording. It's approximately $100,000. And you qualify. Why would you wait? This is from the federal government, done by executive action, passed in the month of March. And it's huge. It's about $100,000. Single individual, $75,000 less, you qualify. Married couple, you qualify. SSI and SSDI, you qualify. Go get it. Go right on this video's button under the video and become a member. Join the channel and become a member and get these incredible checks in every U.S. state. Go right on this video and join. And stay the second half as we go over these $100,000 of forced stimulus checks in every U.S. state. That's coming up in just a second. Now, we had the data that came in as well today from the banking industry. The banking industry is under major pressure. And remember, don't forget to become a member. Here's the link under the video. Join this channel right now. The banking industry reported earnings numbers today, and boy, folks, they were really bad. Let's go over their numbers as well. Jamie Dimon, head of JP Morgan Chase, brilliant guy, but really out to left field, in my opinion. He refused to use the word recession several months ago, but he said a storm's out to sea, but he wouldn't use the word recession. Well, he needed to come a little bit stronger on his wording, and Wall Street was not, digesting the strength of his wording. I think he was out to left field. I think he really got it wrong, and here is what happened today. His corporate earnings took a tank. And he tried to really signal that maybe this economy was not a recession. He just owned it and said, we're in a recession. Here today, JP Morgan earnings fell short of analyst expectations. With bad loans, they're booking a potential write-off of $428 million. The stock is down 5% just today alone. It's down a 52-week low. And this is after JB Dimon warned of massive problems something down the road. The U.S. economy continues to slow, and both the job market and the consumer spending and their ability to spend remain healthy. Do you want to own that stock? I don't want to own the stock. I don't want to own the stock. If this guy, Jamie Dimon, who's brilliant, well-loved, very smart guy, continues to say the job market remains healthy. This is a quote today. The job market remains healthy. It's not healthy, Jamie Dimon. It's 344,000 new jobless claims. It's not healthy. When are you going to stop saying it's healthy? We're now not a quarter million. We're now not a 250,000 jobless claims. We're now, 244,000 jobless claims. We're now at 250,000 jobless claims, per week. The situation and issue is that it has not eased up. Consumer spending and remains healthy. It does not remain healthy. Consumer confidence continues to track lower. And then the U.S. economy does not continue to grow. We already have the Atlanta GDP now numbers. It shows the U.S. economy had a negative quarter of GDP growth that just ended. So I don't know where these people are getting these quotes. Now maybe the quote is delayed. And here is what happened. Wall Street was expecting 288 a share, came in at 276, major miss. Here's on the revenue side. The revenue side was really on the money. His profits were down 28% year to date. Perhaps because he keeps on saying the labor market is really strong. Perhaps because he keeps on saying the U.S. growth is really strong. It's not strong. We're in a recession. I mean, just come on already. Just own it and move on. Let's look at a counterpart. Morgan Stanley reported corporate earnings today, and they were a major miss, down 29%. Profits dropped 2.5 billion. 2.5 billion. Or 29% in just the last from year to date. Earnings were a miss, $1.39 versus $1.53 expected. Revenues were really on the point. Shares of that stock is down 1%. Overall, the firm delivered a strong quarter when it was a more volatile market environment than we've seen in some time, said CEO. Strong quarter, your profits are down 29%. Your profits were down 29%. Is that strong? You see what's going on? Later this week, Citibank and Wells Fargo report corporate earnings. Let's look at the Fed Governor Waller. Waller was asked, are they going to do, would you do 100 basis point at the July 26th, 27th, pencil that in, FOMC meeting? The Federal Reserve is trying to deal with inflation at its worst level since 1981. My base case depends on the incoming data. That's an evasive answer, isn't it? How much more data does he have between now and July 26th? Not a lot more inflationary data. I'll explain to you which ones. He already has the CPI from yesterday. He has the PPI from today. He has the labor numbers from today. It's not a lot of leftover data. Labor going from 200 to 230 to 244. What else data does he need? We important data releases on retail sales and houses coming in before July. Oh, he needs that. Okay. If the data comes in materially stronger than expected, really? Then it would make more sense to lean towards a larger hike rate than expected. So he thinks the housing numbers are going to come in really strong, and that they are. Then they have to do a full basis point. Well, let me tell you what's going on. The number of housing starts and building permits are due to be announced on July 19th. Wait a second. Did I get that right? Did I get that right? Yeah, it's about 7 days before his meeting, and starts are tumbled 14% in the month of May, and permits fell 7%. So he's expecting, if he says that the market's really strong, then we'll do a big interest rate spike. The numbers are not expected to be strong for the housing market, which is already in a bust. Oh, yawn. So here's what you need to know. Here's what you need to know. Analysts now have the following data. They first have, starting today, a worse labor market than we've seen this entire year. And anyone who comes out and saying it's a strong labor market, like Jamie Dimon, is just really, it's just not believable. It's not believable. 244,000 new jobless claims per week when it was just 188 just a few weeks ago. It was just 200 just 4 weeks ago. It's not good. It's going up 40,000 in just about 3 weeks. That's not good. Number two, the PPI number released this morning shows that the producer price index, that inflation's hitting on that wholesale side, up 11.3% year to date, and this is near the highest we've ever seen of a generation, which is 11.6. Then when we look at the CPI number was released yesterday, and that we already know was astronomically horrific. It was horrific. And I'll have Joseph Biden's comments to your President of the United States later in this recording. But those numbers on that CPI were absolutely atrocious. And there's no way to spin it. There's no way to spin it. Inflation's out of control. Let's look at what happened yesterday if you missed it. Wall Street was looking for